US has announced reciprocal tariffs on its trading partners. Though it has been in the news for quite some time, the exact rates have been announced very recently. So if you look at the impact on India and our portfolio, so from an India perspective, India exports about $80 billion of goods to US, which forms around 17% of our overall exports. And if we look at the segments which contribute some of the key exports, it is predominantly contributed by pharma, telecom equipments, gemstone, petroleum products, gold gems and jewelry, and some exposure to textile. So the key thing to note is India is already working on a bilateral trade agreement, and whatever tariffs have been announced is could be at a higher side, and there is scope for reduction as we formalize those bilateral trade agreements and US reverts back to that with lower tariffs. So if we look at the key sectoral exposure from a portfolio perspective, so from an export perspective, the two key sectors which we hold are IT services and pharma. So far, services have not been included in this tariff order, and therefore, from a direct impact, IT services are not much exposed to the recent tariff order. But the point to note is the predominant geography where most of the services are delivered is US. And if these tariff announcements result in higher inflation or lower growth in the US market, it could have a second order impact in terms of curtailment in IT budgets or a slow pace of growth in IT budgets. So that is one possibility which we could see in the near term. But we are optimistic on a longer term picture of the IT service industry for the fundamental reason that they offer fairly high cost advantage, which is unlikely to move away. And technology is an essential thing for enterprises to function. So irrespective of where the manufacturing happens, the technology or the tech landscape continues to be quite pivotal to the end client. Pharma is another sector where people were fearing some bit of impact, but Indian players have been accepted for now. And our sense is, from a generic pharma perspective, the kind of complexity at which Indian players operate is kindly on a lower side compared to many other things. And therefore, US may not be keen to domestically manufacture some of the product profiles which Indian players are into. And the second possibility is if at all they were to tax the pharma imports, that would result in a very high inflation in an essential commodity, and therefore it's unlikely that the Indian pharma could be impacted because of that recent tariff order or any future orders. Some of the other key sectors which are not in the portfolio but which could see negative impact from the recent announcements are auto ancillaries. Some of the auto ancillary companies have very high exposure to US. It is as high as more than 30% in some of the players. And though they were not featured in the current 26% levy, the previously announced 25% tariff is applicable for them. And therefore, from a company perspective, some of the auto ancillary companies could be impacted. Textile industry is another segment where we could see some bit of impact, where Some of the competing countries have seen higher tariffs than India, but there is a possibility that some of the big retailers in the US could come up for negotiation to mitigate some of the price inflation which would happen because of the tariff. So these are some of the key takeaways of the recent US tariff order. So as investors, our advice is to remain invested and continue to focus on the long term, because whatever announcements have come, they're unlikely to be of this gravity over long periods of time, because even the Indian officials are trying for bilateral trade agreements, which could soften this a bit. And many of the export-oriented businesses which India have, they have been in existence for a fundamental reason, and those fundamental characteristics of many of these industries have not materially changed to a large extent. Of course, there could be short-term impact if at all high inflation were to happen in US, and if the global growth slows down, there could be moderate short-term impact, but it may not be very high to topple the economy or to disturb our long-term trajectory. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.